Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. On this episode, I interviewed Gretchen Casey, and we talked about mortgages. That's what she does. She's a mortgage broker. So to start off, we talked about monoline lenders. A lot of people don't know what that is, but she explains what a monoline lender is versus an A lender. They do have very competitive rates compared to A lenders, for example, but they only deal with one product. So we kind of touched on that a little bit. We also talked about using alternative lending to grow your portfolio. When you get to a certain point, lenders become a little bit more strict, and your ratios may become out of whack. So you can use B lenders to continue to grow, even though the rates will be slightly higher. And then we also talked about why you shouldn't go after the cheapest mortgage rate. What are some of the benefits of working with a broker rather than just shopping for the cheapest thing out there? And then we talked about construction loans and private lending. So if you are interested in kind of hearing about current rates, mortgage news, things like that, ways to grow your portfolio in creative ways, I think you're going to get a lot out of this episode with Gretchen. And if you do, make sure to share it with a friend or family member, and then leave us a 5-star review on the Apple Podcast platform. And if you would like to connect with me, I've got some pretty cool opportunities in the Niagara region of Ontario, obviously, Niagara and Hamilton regions. So if you want to talk about some multi-units out there, 3 to 6 unit properties, I've got a few opportunities. Feel free to connect with me on Instagram, WellOffX. I hope you'll enjoy the episode. All right, I'm here with Gretchen Casey. I've known Gretchen for a while. She's a mortgage broker with Mortgages by Gretchen. For those that are a part of certain real estate groups, I know you're pretty active with investors. You kind of specialize on working with investors. So thank you for making the journey out here. I know you don't usually come out to stuff like this, so thanks for coming by.
Oh, my pleasure. I appreciate your inviting me.
Yeah, so I like to start off by asking you a little bit about your childhood, where you grew up, and 1 or 2 things you remember.
Okay, well, I was born in Pontiac, Michigan. I grew up first in Detroit, and then we moved to the suburbs. So I grew up in Farmington Hills, Michigan, went to University of Michigan. And after that point, well, I don't know if you want me to just stick to childhood.
No, that's fine. No, keep going. I had no idea.
Yeah, so when I graduated from Michigan, I went to Boston. I lived there for a couple of years. And then I moved to Southern California, where I lived for a while as well. My parents have a home in Michigan and California, so I go to California every year. I love it. Beautiful in the desert. And moved here when I met my fiance through work many years ago, and moved to Canada.
Oh, wow. I had no idea you were American.
I am.
Yeah. Oh, that's cool. Okay.
So U.S. lending is on my radar, too.
Yeah. Yeah. Okay. All right. So how did you get involved in mortgages, and then also with working with investors?
I got involved in mortgages. I used to be in the graphic arts industry, which was kind of the area I was in was dying because of Macintosh taking over these older types of systems. And so after my maternity leave, and I was looking for something to get into, I had a friend who was in mortgages who said, would you like to maybe check this out with me and maybe be my assistant? So when I checked it out, I immediately had a love for the business, for the way that you put deals together, the transactional basis, but then also the long-term relationships. So I kind of fell into it. I didn't really know that it was going to be something I would love, but it's been almost 19 years now, and I've always been on the broker side, and just I just love the job. I love the challenges. I love the fun of it. I love the clients getting better options and buying homes and all the rest of it. Mm-hmm. And investors, I was previously on a team and with Mortgage Alliance, so the Windrose Group, and the person running the team, Claire Drage, was looking for team members to join her in helping investors, and I was one of the ones that she fortunately was interested in working with on that. And so through her and going to the Right Club meetings and just learning how to properly underwrite and work with investors through that experience, it's just something I also found I really took a liking to and have continued to work in.
Yeah, I forgot that you were also active at the Right Club. So I used to go there and talk to you, and I think at that time you were pretty new to working with investors specifically, but you've come a long way since then. So that's nice to see.
Yeah, thank you. And then we re-met at Durham Real Estate Investors, Durham REI.
Yeah, exactly. Okay, so why don't we talk a little bit about rates today? So for investors, if you're looking at a rental property, what would be the fixed rates and the variable rates roughly?
Yeah, so the fixed right now are I had my notes in front of me just to make sure I got it right. 3.09 to 4.19, depending on the lender you're working with. On the A side, meaning the banks and the monoline A lenders. Variable prime minus 0.75. So prime with most lenders other than TD is 2.45, minus 0.75 and up from there. If you're working with alternative lenders, the rates start at about 3.25 for 1 to 3 year terms. Not many of them will do the variable, but that could be potentially an option. And then those lenders will charge a 1% lender fee on top of the rate. Okay,
and typically with a B lender, is the variable rate higher than the fixed rate?
No, it probably wouldn't be higher necessarily. If it's offered, like I said, it's hard to even find it with a B lender. Mm-hmm. They kind of want their guaranteed return, and they don't really offer that as much, which is one negative. But also, they will do the shorter terms, 1-2 years, if someone wants that flexibility to maybe not continue or not necessarily. They might want to sell the property or something, or refi.
So just out of curiosity, I've never really asked this, but what exactly is a B lender? Is that like a credit union that you have a relationship with? Is it private money of some sort?
So a B lender is a lender who is not covered by the Bank Act. So credit unions actually, their rules when you have less than 20% down is in line with the Bank Act. If you have 20%, a credit union, sometimes they do have their own rules outside of the banks. So it's a non-bank lender who is going to really make up their own rules, although there is some government intervention in terms of keeping them into certain criteria. They will do larger loan to values, not large, they'll go to 80% loan to value, but they will do larger debt ratios. Yeah. So like a bank, the TDS, the total debt service ratio, is going to be a max, usually a 44, sometimes 50. Whereas on the alternative side, they could even let you have like a 65% TDS. Mm-hmm. They'll also use more rental income to help you qualify. They also can use contract rate instead of the stress test rate. So they are much more open to trying to help you qualify for a bigger mortgage.
Yeah. And not that you would necessarily know this, but do you have like an idea of specifically who a B lender is? Is it like a group of people that pool their money together? Is it an institution of some sort?
So as an example, Equitable Bank is a bank, but they have an alternative lender side. Mm-hmm. So, and on the alternative lender side, yes, they have investors who are, you don't know it as the client because you're getting one mortgage from Equitable Bank, but they have groups of investors who are investing.
I see.
Yeah. Okay. And even if it's not Equitable Bank, even if it's Home Trust or it's Haven Tree or it's RFA Alternative or NPX, there's quite a few who are in that realm who have their investors and are all doing very similar things.
Yeah. Well, I know that lenders now, for some reason, it seems like they're pretty strict. Like you need to show typically a lot of income if you have a couple mortgages in order to qualify for more. What are some ways that you can kind of get around that obstacle? Alternative lending, I guess B lenders, like that could be an option. Are there any maybe programs that you're aware of that would help somebody who might have multiple properties, might have some net worth and maybe some liquid assets, and they're able to qualify for a program of that sort?
Yeah, so even on the A side, some of the banks will use net worth as a way to help you. So they are looking at your liquid assets. So if you have equity in a property, they don't consider that a liquid asset. They want to see, do you have some extra RSPs, investments, other things like that. So that even on the A side is an option to show net worth. Also, you can use other ways to qualify. So some of the, for example, there's some lenders that are going to only let you have, say, 4 rental properties, whereas there's other, still even on the A side, that might say you could have 6 or 10 even. Mm-hmm. There's one of the banks you can have 10. Yeah. So it's knowing who they are and then strategically placing your mortgages so you max out on the ones who are going to have the more strict requirements up front first, and then as you grow your portfolio, move to the ones who will let you have more. And then sort of move into the B side. So if you're not qualifying anymore on the A side, and then moving into the private as well, and using private strategically. If you have ability to have like JV partners, you might say, I don't want to do private. And that might work really well for you. You may have a number of those partners, but sometimes you may say, I really want all the control in this project. I don't want that partner, and I don't want to give up 50% of my growth, the return. So you may find it is strategically good to use those other options.
Yeah. And I'm going to put you on the spot here, and I totally understand if you don't know this off the top of your head, because it's kind of a hard question. But what are some of the perks of the specific A lenders? Like, for example, do you know what some of the perks of Scotiabank would be versus TD Bank versus other A lenders?
Yeah, so Scotia's been really amazing with investors in terms of having the net worth program, having a very generous way that they will calculate the use of the rental income. So they use a surplus and deficit formula, which is much more, it's much better than saying, oh, we'll just take 50% of your rent, because then they're still putting in the formula, other lenders besides Scotia, like by putting in your heat and your taxes and your mortgage payment, and it's not a really great formula. So I would say Scotiabank is amazing for that. On the B side, Equitable Bank is very good, and there's a number of B lenders. Back on the A side, pricing is a little bit more, but ICICI, which you may have heard of, they're out of India, they have a really good offset program as well. RBC is really good in that they will let you have more properties than some of the others. RBC will also allow, if you have a 5 or 6 plex, they may be able to do it on the residential side instead of the commercial side.
And in a corporation.
Yes, and that's another thing too. Not all of them will do the corporation, but yes, they would allow that.
Yeah, another thing I can think of off the top of my head is that Scotiabank will use market rents. So if you have a vacant unit, they could use market rents.
Yes,
to help you qualify.
And to 80%, because there's some lenders like TD, for example, if you want to go to 80%, you can't use market rents. They'll limit you to 65% loan to value.
Yeah. And I know I asked you about this, and you recently gave me an answer about TD, but as far as you know, TD will allow a VTB in second position, a vendor take-back mortgage, so seller financing in second position, as long as they are in first, correct?
Yes, and I had this conversation with their rep yesterday or the day before. We just had the conversation because it's not really clearly laid out in their underwriting guidelines they share with us, but I was told, yes, they're fine with that. If ratios work, they just won't go in second, but they are okay if you have somebody else in second.
Right.
Which could also be a gifted or a private, or could be, there's various ways, but VTB, yes, would be one of them as well.
Yeah. So just to draw it or create a hypothetical situation here, you get a VTB for 50% loan to value from the seller in second position, and then TD says, okay, we'll give you 30% as long as you're putting 20% down. We're in first position, and you meet all of the criteria to qualify for this mortgage.
Right. So they will add into the debt ratios the payment you're making to that lender or that seller for the VTB.
Sure. What about monoline lenders? What is that, and who would benefit from working with them?
Monoline means mono meaning one, so one line, meaning they do not do anything other than mortgages. They're not going to have branches. They're not going to offer you RSPs. They're just going to do mortgages. So examples are First National is one of the biggest ones. MCAP is also a large one. RMG, RFA. So these are just, and they don't generally deal with the public directly. They want people to go through brokers. Although once you do a mortgage with them, most likely they will, after that, work with you directly.
Yeah, so I guess one of the drawbacks potentially of working with them is they may not have a home equity line of credit program or things like that, right?
Correct. They don't all have that, although they're working, a lot of them are working towards that. But like MCAP, you can get a line of credit, but you have to have an MCAP first. So you can't do, so they do have that ability at MCAP. First National doesn't at the moment, but they keep saying they're going to introduce that as an option to have the two parts. So, yes, they're not always a full line the way the bank might be.
Yeah, so speaking of home equity line of credit, are you aware of any lenders that will put a HELOC behind a first from from another lender?
Yes. So Meridian will do it as long as the first mortgage is held by certain lenders.
Yeah.
So they won't say every single lender, but they will do it at Meridian. TD, I believe they will do it, but they don't do it through the brokers. So I'm not 100% sure
Okay.
on that, but
Yeah.
I know for sure Meridian.
And again,
think
you
who else?
you also have to qualify, meet all the criteria and everything.
Yeah, and I've done them with Community Trust. They will do them. Home Trust will do them. First National will do them, but it's on the B side, so you're not going to get prime plus 0.5. You're going to get a higher, like 5.99. They don't do it as a variable, which is funny. It's a fixed rate, but it is a line of credit. So it might be a little bit more with them, but they also will. They do it like a B product, so they will allow much higher debt ratios.
Oh, okay. So what would be the typical debt ratio that they'd be looking at?
Usually 50, but they may go like 55% TDS.
Yeah.
And again, they may take more of the rental income, not just 50%.
Okay.
And they will have a lender fee as well, like a 2% admin fee to set it up.
Yeah. Now, some people, they are just looking for the cheapest rate. They want the cheapest mortgage rate possible.
Pretty much everybody.
Why do you advise people not to just look for the cheapest rate?
I guess it depends. Well, first of all, I'd say go for the cheapest rate if you qualify. So if you're qualifying, great, just do that. And of course, you should be conscious of all the terms. Like, is it open? Is it closed? Are you going to have a penalty? Do you need the flexibility to make sure it is open so that if you need to sell the property? So you do need to be aware of all the details of the product. But in general, I say absolutely go for the best rate. We all want to save money. And of course, as investors, that's your goal. You're trying to have cash flow, not just long-term appreciation, but a lot of people want that cash flow. So go for that. But if that's not working out, then look at the other options as you're growing your portfolio.
Yeah, you're steering them in the other direction. You're supposed to tell them why they're not supposed. No, I'm just kidding. But are there any
But you can get those great rates through the broker too. That's what I'm saying.
No, I know that. But I mean, even like, for example, you go to HSBC, you're going to get like a really cheap mortgage rate. But what could go wrong with working through them versus working with a broker who might have a better understanding of your needs?
Well, I would say one reason I love that I'm a broker and I'm not at a bank is I know products from many, many lenders. And I know, too, when the products change and what's available and what their calculations are. So I can tell you, okay, if you want a mortgage and a line of credit, we know that up front. Here's 3 options, and this is why I would recommend this one of the 3. And then you can make that decision. And in many cases, there is no broker fee. So you're getting the free advice of a broker without paying an extra cost. So why not at least consider talking to a broker as you're, talk to a bank and talk to a broker just to see. And the other thing too, though, we were talking, I just was realizing, like, yes, rate is not the only thing. Like if someone is doing a flip and they need money short term and the property is not great and the bank's going to go, oh, this is as is, like I don't even need to see the property, we're not going to do it. You can get your deal done if you know that there are these other options available that, yes, they may be more expensive, but they're going to get the deal done.
Sure.
And you're going to make the money you're hoping to make, and they might be flexible with a 3-month term, and you're not burning the bridge with the lender, because if you tell a bank, oh, I'm going to I'm going to rent this out, and then you fix it up and try to refi or flip, and then they see that, maybe not immediately, but later when you come back to them for the next deal, they see right away this was not a rented out property. You were trying to flip or burr it, and we don't like that. Now you're blackballed.
Yeah, for sure. What does it mean to be blackballed? Like, do they just not want to lend to you forever, or is it a certain period of time? Or I don't know if you've ever come across that situation.
Well, I've come across. Well, one thing that happens too is you buy and say, I'm going to live in this property, so I'm going to do 10% down maybe because I don't have 20%, so I'm going to do 10%. Okay, now I'm going to do this other property, and I'm going to tell them, maybe I'm not going to go, maybe the first one's Scotia, and I'm going to go to TD, and I'm going to tell them I'm going to live in this property, and now I want to do that one at 90%. Okay, so now you're getting, maybe first 2 it works out. By the 3rd property, that lender is going to go, what are you doing? Even maybe by the 2nd, because they can see what you're doing. You're trying to take advantage of the rules, and you're in. It is fraud if you're not going to live in it. If you know from the start, I'm going to say I'm going to live in it, but I'm not.
Yeah.
So they just start, when blackball doesn't mean, they're not going to, it's not going to go on your credit bureau. It's just they're going to have that in their record. So if you come back to them again, they're going to go, no.
Yeah, it might be harder to get more, like if you're refinancing, you're trying to get other products, it might be, well, they're probably just going to say no to you.
Yeah.
Yeah.
They'll go, or they'll also tell you, like sometimes as a broker you don't know, and you submit a deal, say you submit it to Home Trust because it's maybe a B deal, and then they go, oh, we saw this deal a month ago from another broker. We're not doing this.
Oh man, that sucks.
And then I look bad, but fortunately, I wouldn't. I also try to ask people, like, have you shopped this, or who have you been with, and what's the experience? And some people don't want to tell you because they think, oh, I'll get an advantage by hiding a bunch of stuff in the background and get this broker to just do what I want. But it often can bite people. So now broker doesn't want to work with them, and so it's kind of good to be honest.
Yeah, I totally get that. Private financing. First of all, if you just want to kind of explain, well, I'm sure most people understand, but like private financing, you get funds from an investor. They give you cash. They say, hey, find me a home for this money. And then you will say, okay, I have a flipper that wants to do this house. They need private funds, whatever, that sort of thing. So you're brokering the money. That's kind of the general idea. But so why should somebody work with a broker to do that rather than try to find somebody directly themselves?
Well, I would say, for one thing, maybe do at least your first deal with a broker, because you really can learn the process, the ins and outs of it, what to do next, and you're basically getting free consultation because you're not paying the borrower is the one paying the broker fee. So why not just see how it's done? We do provide, here's a term sheet for a first mortgage, a term sheet for a second mortgage, which is your commitment. So you don't have to try to come up with one or hope your lawyer has one. And hopefully if you're working, and you can go to more than one broker and say, hey, I have some money, they're going to find you that lender. So you're not going to be having periods of time where you're waiting because you don't really know anyone who needs money, or, you're trying to establish relationships. They can have borrowers available readily and often. So that would be advantage as well. Also to mediate, like let's say somebody's past due on the money didn't clear the account for the day the payment's supposed to be made. So you tell the broker, hey, could you deal with this? So the broker is going to be the one to call the client, what happened? Can you please make sure the money's there, and tell the person, like, this, you are going to pay a fee for NSF, which might be $200, or they're giving you one more chance. Don't do this again because it's really not a good idea because you're going to pay for it. Yeah. And so help deal with the process so that you don't have to do all the, sort of dirty work. Also, when it's up for renewal, find out if the client's going to renew and give you the heads up, or if you are willing to give a renewal. So a lot of the admin side gets handled. You don't have to worry about it. And vetting that initial person, like getting their credit bureaus, their proof of income, a purview on the property, so that you're given a nice clean package, all the details, and mainly what's the exit strategy. How is this person going to, if you only really want to give them 1 year, how are they going to pay it back in a year? Yeah. So, and you'll know that as a broker, like, oh, they have a first mortgage up for renewal, so they're going to pay it back with a new first mortgage, or they're going to sell the property, or they're getting an inheritance, or whatever's going to happen. You can make sure that the exit strategy is solid, so that the whole deal is going to go through. You're going to get your payments, and it's going to get paid back. Yeah.
Well, you kind of touched on the question that I was going to ask you. So for them the borrower having a good plan, knowing approximately when it's going to happen, that sort of thing, what other things do you look for in a borrower that make them a solid candidate to borrow those private funds?
Well, there's two kinds of borrowers in the private world. It's the investors who might need that money to close a deal or do the reno or whatever they need it for. Or then there's the consumers. So the consumers often have some debt to pay out, but their first mortgage perhaps is not up for renewal for 3 years. So they don't want to pay a $25,000 penalty. They want $75,000 to consolidate debt, and it all makes sense. So I'm not sure I'm answering your question. Sorry. We'll go back to what the question was.
Yeah. So how do you identify a good borrower?
Yeah, a good borrower. Apologize. So, first of all, it depends on the lender, because some lenders prefer private lenders. Some say, I only want to deal with investors because I don't really want that pressure of this is this person's home that I may have to take. Yeah. Others say, no, I like dealing with homeowners directly because they're going to make sure they live in that home. They're going to make sure that gets paid because they don't want to lose their home. So first of all, it's who they prefer to deal with. And then it comes down to like loan to value and, just comfort level. And if it's someone's first time and they really just have no idea, I would kind of make a recommendation based on what they are telling me and how much risk they're comfortable with. And I might say, hey, this is a good one, 75% loan to value. I've dealt with this person before. I know they're going to pay you back based on experience. I mean, I don't know because I'm not them, but it all makes sense. So I can help, kind of feel it out for someone. Or if they just want to tell me, we have to ask up front, like, when do you want the money back? How much do you want to lend? Is it with a trust like Olympia Trust, or is it cash? So kind of make sure they fit together. So I can't say there's like one perfect borrower. But
so if it's Olympia Trust, does that mean the funds are in an RRSP?
Yes.
Always.
So they're in a self-directed RSP.
Yeah.
So there's Olympia, Canadian CB Trust, and Community Trust are the three most known ones. Yeah. Olympia Trust recently has been best to deal with.
Okay, so if you have, like, say, I don't know, 100 grand in an RSP and you want to do private mortgages, which you're allowed to do, how would that work? What would that person have to do to start investing that money?
So I can help connect them to Olympia Trust, or they can connect themselves to whoever they want to. They would then move their funds from where it is now into the Olympia Trust account. And then when it's all set up, they would say, okay, I'm ready. I've got the money there. I'm ready to lend. And so all of the monthly payments go back into that RSPs, because that's how RSPs work. Everything has to stay within it. Mm-hmm. And then when it's paid back, it goes back into that self-directed RSP and then can go out again to be lent. So there's no taxation until at a later time if they take it out, just like any RSP.
Yeah. Okay.
Versus you can do cash. Mm-hmm. You don't have to lend through an RSP. You can just say, I got 100,000 line of credit. I just want to do cash, and I'm going to do my own taxes and claim that income. You can do that too.
So they would what would they do? Would they write you a check and then you would broker it, or
No.
do they write the check directly to the person that's borrowing?
So they would just keep the money in their account till right before closing, and then the lawyer would handle the transaction. So the lawyer would take the funds, and then the lawyers would send the funds to the other lawyer for the. Got it. You'd have two lawyers involved, just like you do on any transaction with a bank.
Mm-hmm. Gotcha. Okay, now what about any programs on the private side for 100% financing? Are you aware of anything like that on your end? Yeah,
so if someone has experience and can show this is my portfolio, I've already done some things before with, usually it's doing a flip or a burr where you're going to do the 100% and then you're going to improve the property and you're going to pay it out after. So it's harder to get if you don't have any experience doing that. So in that case, they may want to blanket on another property. So it's not really 100%. But if you have experience and you've done stuff and you can show, listen, I know what I'm doing. I'm a contractor. I have partners, whatever the situation, then you're more likely to get the okay to do it. And then the appraisal would be the current value, and then the as improved, or they call it after repair value, would be calculated, knowing that it's going to be.
Okay.
Okay,
so it really depends on, it's a case-by-case basis. You look at the overall picture and you kind of decide based on that. And what about construction loans? Is that something you deal with? How does that work exactly?
Yeah, so you can get a bank construction loan. We have a few that will do that, and they will want up front, let's have your plan of what you're going to do, how much money do you need, what kind of draws are we going to set up. So they will it's pretty much a private type of mortgage because of the short term and the needing flexibility. So rates are usually 8.99. There's options to do it, like Meridian, Scotiabank does them. As brokers, we help start the transaction, and then they kind of finish it off in terms of doing the draws. We have other institutions that do it too, like Pillar Financial, and then private lenders too, who will do construction. And sometimes private will say, the nice thing with private, sometimes they're more flexible. They might just say, listen, I'm just giving you all the money up front. I'm not going to make you prove you did certain things and do draws. So that's why sometimes private can be a nice option too. Gotcha. But it's all private level of terms of the rates. And then there's also, ahead of time, we look at what's going to be the takeout mortgage, the final mortgage, to pay that all back.
Yeah. Okay. So you obviously have to qualify the person, make sure that they're able to get a mortgage after everything is done, that's part of the due diligence, right?
Yes.
Yeah. Okay. Now, what about like any blanket mortgages, that sort of thing, commercial loans? Can you tell us maybe ways of how that can benefit investors that might have multiple properties?
Yeah, so blanket is usually more of a short-term thing because most of the non-privates, unless maybe at a branch, if you've got a good relationship, they don't tend to do the blankets. So I'd say if that's something you want with a bank, I'd say go try the branch. I mean, maybe there's some brokers who specialize in that, but I don't. So on the private side, though, it's very common, like mentioned before, that if you want to have a lower loan to value, you will put it on multiple properties. Again, having some eventual strategy of maybe paying that back.
Yeah.
And then you mentioned commercial.
Yeah. Well, I mean, let's say you want to refinance 3 or 4 properties that you have all at once. What would you advise? Like if the A lenders are saying, no, your ratios are no good, how would you kind of go about doing that?
Well, as I say, you can go with other lenders, or there is, like, some of the banks do have business banking where they will look more at your total portfolio. So it's a matter of, and I have some good contacts at some of the banks for that. If you needed to go to that type of financing, they definitely can look at it in a different way over the whole portfolio. The only thing is, though, they would sort of do it property by property. If you're already with, say, 4 or 5 different lenders right now and you're trying to make the switch, they would probably just do it in a staged kind of thing.
Yeah. And they would probably just give you, like, I don't know, like a 70 or 65% loan to value on everything, something like that, I would guess.
Yeah, and it's more of they would call it a loan, even though it's a mortgage because it's sort of, there's property involved, but it's set up a little differently.
Yeah.
And does allow for expanded buying.
Yeah, for sure. Okay. Maybe one last thing here. Private rates right now. I know it depends on the credit score. Like, there's a lot of things, but maybe just kind of an idea. What would you look at for a first in terms of rate, and then maybe a second as well?
They don't really care so much about credit score, so it's not necessarily an issue.
Okay.
A lot of times that's why you're doing private. So kind of a general idea is a first mortgage, 8%, 2% lender fee, and 1% broker fee, which could be the broker fee. If it's a big enough deal, it might not be 1%. A second mortgage, often 11.99, 12% with lender fee 2 to 4%, depending on the loan to value and maybe the credit, but usually loan to value. And then same thing with the broker fee, might be 1% or a set amount.
Cool. Okay, that's good to know. Do you feel like there's anything we missed or anything important that you would want to share?
Well, I do encourage investors to talk to a broker because I know it's a concern sometimes, can they get my deal done and can they do it fast? Do they have enough knowledge? Are they the right person? I would definitely say you do want to try someone has some experience in the investor world because it is so different, as we know. And it doesn't hurt to get a second opinion because you might get a lot more equity out than you're going to get from the bank. Be able to grow your portfolio, which is your goal.
Yeah.
And it's I think a smart thing to do.
I agree. I think a lot of banks or people at the bank, they're not necessarily really good at their jobs. So, like mortgage broker. And I'm not trying to knock anyone, but they don't necessarily get back to you very quickly, or they're not as knowledgeable as brokers typically. So, yeah, I do agree that it's good to consult with the broker at the very least. Yeah.
Yeah.
Okay, so how do people reach you, Gretchen, if they want to get some information on mortgages, loans, that sort of thing?
Okay, well, you can call my office, 905-579-4412. You can go to mortgagesbygretchen.com and you can book yourself right on the calendar. There's a link there to do that. I think Gretchen and my email.
Yeah.
Gretchen at mortgagesbygretchen.com.
Perfect. Okay, Gretchen. Thanks a lot for driving all the way out here and doing this.
You're so welcome. And I will add, find me on Instagram and Facebook too, because I share a lot of tips and info on there.
Mortgages by Gretchen.
Mortgages on Instagram, mortgages.by.gretchen.
Yeah.
And then my page, Mortgages by Gretchen on Facebook.
Okay, cool. Thanks a lot.
Awesome. Thank you for having me.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.